Y'all see, man. Y'all see what I'm about to talk about today? I'm really about to drop some gems for y'all, man, because this is even for me too. And I think this is one of the main things that people struggle with when it comes to trading. Like, you may have a strategy, but at the same time, you are getting out the trade early. You're not letting them play out. You are thinking in the wrong mindset. And I read Trading in the Zone. And I'm not going to say I'm an expert on this, but I'm just going to share what I learned. So I read Trading in the Zone, and Mark Douglas was talking about thinking in probabilities in part of this book. And I have a couple, sections of the book that is very important to me and that I thought would be very valuable to anyone else on their trading journey, struggling with psychology, or anybody who just wants to. This can even go for like any other aspect in life, because there's so much uncertainty in life, and you need to understand that and accept that, or else you're just going to stay in this certain comfort zone that you're in right now. And your comfort zone is actually just going to get smaller and smaller because you're not doing things that have uncertainty in them. Like, we're just going to get straight into it, man. We're just going to get straight into it before I start rambling, bro. First thing, a prerequisite for thinking in probabilities is that you accept the risk. Because if you don't, you will not face the possibilities that you haven't accepted. Wait, you will not want to face the possibilities that you haven't accepted if and when they do present themselves. When you train your mind to think in probabilities, it means you have fully accepted all the possibilities, no internal resistance or conflict, and you always do something to take the unknown forces into account. Now, it's a lot to break down here. I'm not gonna lie, it's a lot to break down. But I'm gonna just give y'all an analogy, because before we break this down, I want you guys to understand, like I was saying earlier, there's so many other things that you can take into account with this, not just trading, but just life in general. So let's just think about driving a car, right? And this first sentence, a prerequisite for thinking in probabilities is that you accept the risk, because if you don't, you will not want to face the possibilities that you haven't accepted if and when they do present themselves. Okay? So when it comes to driving a car, you have to accept that risk that there are other people on the road. You have to accept the risk that there's going to be crazy drivers. You may get into a car accident. You know, basically your life is on the line. You know what I'm saying? And most people accept that risk. But then there's people who don't accept that and they don't drive. You know what I'm saying? So if you're driving and you don't accept this risk, and you're not going to want to face the possibilities, bro. You know what I'm saying? Nobody wants to face the possibility of possibly getting in a crash. Like, you try and avoid it as much as possible. And that's why you do things that help you stay safe on the roads. I learned in driving school to drive for other people. You know what I'm saying? Drive for the other people on the road, make sure you're just safe. Okay? And when it comes to trading, I have a good example of like accepting and knowing what you're risking before a trade, and that kind of takes away some internal resistance. You know what I'm saying? So, say you don't have a risk management system and you end up losing your whole account off one trade. Like, what? No, let's say instead now you are risking 1%. You're risking 1% a trade, or $100. Like, you accept the risk, okay? You have to start with something that you accept, okay? At least. So it can be small, but this trains your mind to think in probabilities. You know what I'm saying? And you have to accept all the possibilities. What are the possibilities of losing or risking $100 in a trade? You may lose $100, You may win $100, or you can cut early. But if you really let the trade play out, you either lose or make $100, or you can even make more. You know what I'm saying? And then saying you always do something to take the unknown forces into account, it's just like you have to realize that there's unknown forces in the market that you don't know about. Like, that there may be like a whale or like a big trader who can move the market one way, but you have to take that into account. And that's also something you have to accept. So this is deep. This is a deep quote, and I really think that if you can nail this down to a T, and you have your strategy right, and then you got your risk management, the three things, bro, I'm telling you, there's like three pillars that I've been learning, and I think it's risk management, your strategy, and your psychology. Simple as that, bro. Simple as that. Next up is this quote: for any particular pattern to be exactly the same now as it was in some previous moment will require that every trader who participated in that previous moment to be present. What's more, each of them would also have to interact with one another in exactly the same way over some period of time to produce the exact same outcome to whatever pattern was being observed. Dude, the odds of that happening are non-existent. It's extremely important that you understand this, because the psychological implications for your trading couldn't be more important. Now, this is something that I feel like it's kind of self-explanatory. The way I read it and the way I understood it is like, yeah, not everybody's going to be in the market at the same exact time. So, you know, patterns are not always going to be the same, you know? So every trader is not always going to be present in that moment. So let's just think about this, okay? You have a jump shot in basketball, and your jumper may not always be the same. Like, it can be like a little, to the right or a little to the left, but you're shooting that jumper, or you're like shooting from a different spot every time with that jumper. You're not always going to be in that same exact spot. You know what I'm saying? Your feet aren't going to be in the same exact, place on the court. There's going to be a different court that you're playing on sometimes. Like, you just have to understand that. And that's just like very low. I wouldn't say it's non-existent, because a court, the basketball court, your feet may end up being on the same exact spot, but we're not going to nitpick, because you understand, you understand what I'm saying. And basically, when it comes to like candlestick patterns, a pattern in the market, same old thing. Like, the candles may not be the same length, the price isn't going to be the same price, but you think in probabilities and you understand that you see your pattern, and it's like, okay, it's not going to be the exact same, but that is something you accept when you think in probabilities, right? That's just something you accept. And the way this candle is created is obviously going to be different, because it's going to be different traders trading that candle in this specific period of time. Man, it's going to be different, bro. It's never going to be the same. So this is just something that you have to accept, bro. Some deep stuff. This is my favorite one. And this is what clicked for me the most, because, oh my God, let's just get into it. You don't have to be right. You just need an edge. I wrote that right there. So traders who have learned to think in probabilities are confident of their overall success because they commit themselves to taking every trade that conforms to their definition of an edge. What is your definition of an edge? That's what you have to ask yourself. It is the variables you consider in your strategy that allows you to execute a trade. Let that sink in, bro. Let that sink in, bro. I love basketball, so let's just say when Let's just say your edge in basketball is a wide open three in the left corner. So you're open in the left corner, you shoot it. You're going to be confident in it because you're committing to yourself that you're taking that shot if you are wide open, because that is your edge. Now, with trading, what is your definition of an edge? You know what I'm saying? It can be a break and retest, and it might have to break below a certain previous candle or something like that. It can be a supply and demand, it can be support and resistance, and it does this. It has to do this certain thing at a support and resistance. It has to do this certain thing at a supply zone, demand zone. You know what I'm saying? And once you understand your edge and you back tested that edge to actually make sure it's an edge, you know what I mean? Because some things aren't an edge. Like, you got to have your strategy down and understand that this is an edge and it's a higher probability of it winning than losing. But we don't know what's going to happen. You know what I'm saying? You don't have to be right. Man, I like this stuff, bro. So I had extra stuff when I was looking at this. Like, I wrote some notes. And let's just say, no matter what recently happened, like, don't think about that. Don't think about what recently happened. Because you don't have to be right. Don't even worry about being right, bro. When you think in probabilities, you're not going to worry about being right. You're just going to see your trade, take it. Win, lose, draw. It is what it is. You know what I'm saying? So that's very important. Keep in mind, bro, I'm with you guys. I'm literally not perfect in this stuff, man. I'm improving every day. But I've just decided to share this with you guys. And I honestly think that me explaining this to other people, whoever watches, like, it can, sharpen my understanding and hopefully allow me to really take this trading to the next level. So it's just trusting your edge, bro. Your whole intention is changed now. We're all trading to make money. We all know that. But what's next? You don't have to be right. You just trade your edge in the market because your edge is there to make you money. You lose on your last two trades that were an edge, you may win on the third. You win on your first three trades with an edge, you may lose on the fourth. Like, you just have to take the trades, bro. You just have to take them. Don't overtrade either, but let's not get into that. You figure out what you're comfortable with, like how many trades you want to take a day. And y'all got to understand this, man. I have to understand this. We got to get this down, y'all. And I really hope you guys enjoyed this, man. It's just a couple gems. Like, I'm probably gonna make another video about this, maybe a part 2, because this stuff is deep, bro. This stuff is really deep. And this whole book, Trading in the Zone by Mark Douglas, like, shout out Mark Douglas, bro. This whole book just changed my trajectory of trading, and I ended up, you know, figuring stuff out. Like, I was trading for 2 years, didn't even have a true strategy. I was just doing stuff. You know what I'm saying? But now it feels like I am structured with this stuff, and I'm just glad that I was able to push through and finally find something. And I finished this book in like 7 days back in May. So now I'm back looking at this stuff to make sure that it stays in my mind. So shout out to Mark Douglas, man. See y'all later.